What's up YouTube, it's Louis here. We're looking at Matic Polygon on the 1 daily time frame. What is going on the daily time frame? Well, first of all, we know that we're coming back on for support on that golden pocket. As long as this golden pocket can hold, we are still validating that 1618 target, $3.30. I know I've been rambling on since the 13th, 14th of December back down here about this technical target, but it's only right for me to tell you that because once we broke above the 618 here, it validated it. Now you run into that 1.272, breaking the previous all-time high, which is this red line. You put in a new all-time high, run into that 1.272 exactly before getting rejected and obviously closing below that previous all-time high back over here and getting rejected, coming back down to the golden pocket, losing it, giving us a little scare, but bouncing off $2 exactly, a nice psychological level, flipping resistance into support, basically. Fake out here, little fake out here, confirming as support with that wick over there. What did happen next is that you broke back above the double brick wall, which it was holding nicely. Look at that bounce from the double brick wall. You lost the 20, your continuation moving average. What holds you up is your double brick wall. Boom, new higher high. You did lose it in the short term to come down to that psychological level, got back above it, and the 20. I don't like it doing it on the first attempt, but again, it did it. What we were anticipating is a drop, of course. Yesterday we got that. We were expecting on the 4-hour time frames for EMAs to hold. I don't think they held. That's fine. Why? Because on the daily time frame we're coming back down for that 55 daily EMA retest inside that golden pocket. What's interesting is I think this is exactly at the 618. Oh no, the 618 is just down here. So I thought this was exactly the 618. The 618 is just here on the 050. So as long as we're finding support above that, we're good. You can see when you came and lost that, holding a support, you came to the 786 and got back above the 618. This is very positive because a lot of the time it gets rejected here and goes to the 1. You didn't do that here. You did get rejected, but printed some sort of doji as support and resistance at the same time. So indecision, no one knows what's going to happen next. Decision will be made. Decision was made. Boom, pump to the upside. Now coming back for support. Hold it support. Get back above the 20. Confirm that support, and we'll start heading higher to our 1618 $3.30 target. So I hope you understood that at the moment. Let's go to the 4-hour time frame now to make it a little bit clearer. Let's get rid of that because we don't need them fibs. So yeah, yesterday I told you about this bearish divergence over here. You were having higher highs and higher lows on the chart, but guys, you don't even need the RSI for this bit. Whenever you see a formation like this, note this down, it is usually, obviously, if you look at the RSI, you'll see that it's bearish divergence because the momentum is nowhere. Do you see what I mean, guys? There's no momentum here, lots of momentum here, dying down. Even though you're printing higher highs and higher lows, this is market manipulation because the RSI is telling us, no, we're actually going to head lower. Now, what I was thinking is we were going to come down to here, target was met, but I did think we were going to fall to that bullish cross and hold it. Now, that wasn't the case, and that's always because we need to bear in mind patterns, right? And the patterns over here, this double bottom, is telling us that we never retested the neckline. Yes, here we did instantly, but I like to see space in between the retests, like this space. So see, you came up, instantly came down. I don't like that. I like to arch away from it, come back, retest, and then we should have gone lower, but it couldn't. So that's why we obviously put in a higher low and continued up. Now you got above resistance, we arched away from it, coming back to that support. Now if you don't get down there, the reason is obviously because of this trend line, this larger rising wedge support point. That is where we're sitting on right now. But of course, yeah, you lost the EMAs with a bearish engulfing, very negative pattern, bearish continuation pattern. So we should see some momentum to the downside if this does not hold. Of course, I would like to see this hold, but we need to bear in mind, guys, that obviously now that we have put in a bearish engulfing, we want to come down. Yes, you've printed a higher high above this. This high is higher than this. Amazing signs. As long as we print a higher low above these two lows, we're good for continuation. Now, if we were to lose this low at $1.92, then I can give you a technical target to the downside, and that would be if we were to lose the 1, we come to this 1618, and this is already marked out for you guys. I think this is a previous, if we go to the daily, let's go back to the daily. Yeah, this was a previous swing high over here. Look, it's this box, isn't it? A larger 0618. and this 0618 is giving us that 1618 target at $6.73. So as long as we're above $1.55, I'm happy for Matic to do whatever it wants as long as we stay above $1.55. We could come to $1.55, I don't care. As long as we're above that, we're good. And look where the 200 daily EMA is sitting, above that $1.65, guys. It's 10 cents above where we need to stay above. And as long as we're above this 200 EMA, we should be looking for buys. Every dip we should be buying. This is what this is signaling. You can see here, you come down so nasty. Look, percentage drop 43%. You're still above the 200 EMA. We should be buying. What was that? After a 43% dip, you got a, if you bought the bottom, you got a nice 119% pump. Look at this dip over here, dipped 35%, still above the 200 EMA. Every time we get a dip above the 200 EMA, we should be looking for buys. What did you get if you bought that? Let's go all the way to the top here. 100%. So each dip was roughly what, 35-40%, and each pump was roughly 100-120%. So let's check what this is doing now. How much have we gone down? Yeah, roughly 35%. And if we were to do a similar movement up here, go up 100% from the bottom, where would that take us to? 100%. So 100% would be roughly at $3.80, around the 2. And then obviously, let's go to 120%. 120%, just above $4. So yeah, just at that 1.272. So technically speaking, we should go to in and around the 2 to the 1.272 out of this new impulsive wave. We're not done yet. We're not done yet, because this obviously on the way there, we're on the way to these targets. We're meeting that 1618. But this is not the freshest fib. This is from this dip, but we have a new one. So if this is the bottom here, and bearing in mind we don't lose that low and go to the 16188 down here at $1.62, then we could be good for continuation upwards. So I'm going to get rid of that fibs, these fibs right now. Let's get rid of that because they're a bit in the way. But yeah, so for this target over here, we measured from here to here at the previous dip, right? But along the way to that technical target up here, you're going to have dips, and this is what we're seeing. But now we can get fresh fib from here to here, and you can see that's very nicely lining up with that $3.81. And what did we say from the bottom? If we do 100%, that should be our target. Look at that, guys. Look at that, exactly 100%. Guys, this is what I'm looking at next for Matic Polygon. So I hope you guys enjoyed this video. Please smash the thumbs up button. We know in the short term we could get some further downside. I don't know if we went to the 4 hour. Yeah, we did, because we had that bearish divergence. Let's hold this as support down here, or the trend line that we're on right now. Of course, yes, we're below the EMA, so we should continue down. If you were to lose this low now, I've given you the target $162. I'm going to put this line over here for you guys, so it reminds you. Put that in your chart. So guys, the fibs and the EMAs and obviously patterns is all you need, basically. So yeah, as long as we're above $1.55, we should be going to $6.70 or something like that. But we have now, looking at previous dips, knowing that they go down roughly 35-40%, and this dip being 35%, the pumps after those dips were 120%. And if we were to do 100% from current price, we'd be hitting that 1618 exactly. And this is our technical target anyway of a new impulsive wave once you get above $2.48 at the 618 over here, which is also our previous head and shoulders neckline. So guys, I hope you enjoyed this video. Please smash the like button. I really enjoyed making this video, and of course subscribe to the channel. We're trying to get to 1.5k subscribers by the end of this month. I know we can do it. Please turn the notification bell on and catch me on my Twitter, Louis_crypto, and I'll see you guys over there. Peace.